Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. If you'd like to know the absolute latest on any commercial real estate related topics, check out our on-demand show podcast. There are recent shows, including one on tips for using LinkedIn, I think you'll like, and updates and projections on the major sectors like office, industrial, and multifamily. Just grab your phone, tablet, or computer, visit iTunes, YouTube, or the show website, commercialrealestateshow.com, and you'll see some changes there. It's a brand new website, lots of content. Please do check it out. Today we're exploring retail and retail real estate. Please welcome Mike Pooling, SVP Leasing for DLC Management. Headquartered in New York, DLC leases over 117 open-air shopping centers, totaling over 16 million square feet in 31 states. Mike, welcome back to the show.
Thank you.
Appreciate you being here. Also, please welcome Robert Franson, partner, Coro Realty Advisors, a full-service real estate investment and managing partner founded in 1997 with a special focus on retail. Robert, thanks for joining us.
Thank you.
Well, guys, you've heard from Dan Fasulo about the investment market, and I'd like to switch gears a little bit here and talk about some of the tenant demand, because if we don't have the tenants, we don't have any investment properties, do we? So, Mike, how are you finding demand right now for tenants? I mean, some of the listeners may think, there's not been much demand in the past. What are you seeing today?
Well, DLC has a pretty geographically diverse portfolio. We operate from coast to coast in about 30 states. So I think that we have a pretty good benchmark, and what we're seeing is pretty high demand in most of the markets that we operate. And that's by every metric. If you look at decreasing vacancy, the rent growth, the basic economics in most of the markets that we operate in, we're seeing some job growth, which is always a positive sign. And we're really seeing it moving in the right direction. Now, there are some places, I would say, across the country that are still feeling what's left over from the recession. But I think that everyone's headed in the right direction at this point.
And if you will, give me a couple of examples of cities maybe where you're seeing more demand or less demand, or maybe the recovery is trailing a little bit more.
I would say some markets in the Southeast, specifically Atlanta, seems to be lagging. Down in South Florida, we're seeing a huge, robust recovery. I mean, things were really tight during the recession down in South Florida. Now it's on fire. D.C. never slowed down. I mean, D.C. is just so robust. I mean, huge tenant demand for all of our properties up in D.C., New York, Chicago. So I think really all the core major markets, we're seeing just a huge tenant-driven demand, which is exciting.
And your properties are Class A open-air shopping centers, right?
I would say that we have we're more in the value-add type business. Okay. So while we do have some core properties, I mean, what we do is we try to go and buy an asset that we can add some value to with our expertise in that particular market. And we're finding a lot of that on the market right now. So it's a good time for us.
Okay. And Robert, what are you seeing for the types of tenants? Who's active out there?
I think it's all types. Last year, we started to see a lot of people re-enter the market that hadn't been active in a while. 2012 was kind of the year of the discounters. The dollar stores were moving into old boxes, and people were backfilling because they could get it at rents that they haven't been able to get in years. In 2013, we started to see the return of grocers, started to open new stores again. I mean, just as an example, I was reading Publix's 10K recently. They did 10 new stores in 2013, which was kind of a low number for them. They're projecting to do 31 new stores in the coming year, and then ratchet up from there. So they're active. We're also seeing a lot of smaller tenants. Franchisees are popping up. New concepts. We're seeing a lot of our tenants that the hair salon that's opening a second and third location, those kinds. So it's been really kind of across the board from credit national tenants to local mom and pops. And I think it's all driven by the same, which I think is people are just a little bit more comfortable about the economy and where we're headed. Where a year or two ago they were all just sort of sitting on the sidelines waiting to see what was going to happen.
Yeah, well, that's good news. And Mike, you're dealing with tenants leading up leasing around the country, a lot of different tenants. What's important to these tenants today when they're expanding and looking for new locations, in their leases and in their sites and locations? What seems paramount to them?
I think one of the most important things is for them to find the right footprint and the right location. I think many retailers continue to struggle, with right-sizing their retail stores and, figuring out how that works into their omni-channel plans. And, I think if there's one thing that retailers learned from the last cycle was that, bigger stores doesn't necessarily mean bigger profits in the long run. And so I think that there's this continual shift to try to look to right-size their footprint, and I think that getting flexibility to be able to contract or grow if necessary is paramount to a lot of retailers today.
Okay, so in their leases, they're trying to get some flexibility for changing the sizes of their space.
Yeah.
And then they're concerned with being in the exact right location, a little more concerned about where they are.
Right, absolutely. Yeah, and it's not so much necessarily a downsizing as much as, okay, they're going to fight really hard on their sublease provision, right? So because if they want to have the ability to downsize and sublease a portion of their space, right? And you're seeing a lot of that right now.
When leases are renewing now, are you still seeing some downsizing, guys?
Yeah, I would say so.
Yeah, I think we are, and I think what we're seeing is sort of a return to fundamentals in the sense that a lot of the troubled retail development was in the path of growth, quote unquote, right? It was going to be, well, they're building permits for 5,000 new houses. That's where we need to be, and then 85 houses were built, and that. So we're seeing much more focus on visibility, access, things that sort of what you really ought to focus on, as opposed to just, well, there's going to be all this growth down the road. The other thing we're finding with the smaller tenants is they're still pretty cash poor. So we are getting still a lot of demand for TI, where they basically want you to put them in business. The old days of, well, we'll give you a couple months of free rent, you build it out yourself. There's still a lot of pushback, particularly from the smaller folks who just don't have the capital to put $40,000 into a space to build it out for themselves.
And what do you look for as a landlord to think about attributing to TI in that amount?
Well, it's sort of a general trend is we put a lot more emphasis on the balance sheet, quite frankly, than we used to, and who's the credit behind the deal. As where, look, 3 years ago, you take whoever you can get. And, do you take a flyer on some tenants, and if they don't make it after 18 months, well, it's 18 months of revenue you weren't going to have. Now we put much more emphasis on who's the sponsor, do they have other locations, what's their balance sheet look like, those are sort of the fundamentals we look for, much more so than the old model used to be. Well, I'll pay $10 a square foot and amortize it over 5 years. I need $2 more in rent. Well, that's great, but if they're out of business a year later, that didn't do you a whole lot of good.
Right.
So we're definitely looking more at the cash position of the sponsors.
And what tenants are struggling right now? Who's closing, and what do you see out there?
I think that we're all reading the headlines of the people that are closing the stores, the JCPenney's, the Radio Shacks, of the world, and I think it's if you look at who's being most affected by the change in the consumer and who's buying what online, the office supply stores, I think you're going to have a continual change in all of the retailers that we work with in the shopping center business regularly. But I think it goes back to my point earlier of them figuring out how to right size, right? Because they're still going to have a retail presence, right? You're still going to have office supply stores. They just might not be 30,000 feet, right? Because they're doing a lot of that business online now.
Yeah, and I noticed some of these tenants are kind of licking their chops when they see some of these tenants closing stores when they can get in those prime locations, right? So that can be significant for some of these retailers, because I know some of them are having trouble getting into the great locations in some of these markets. Well, stay with us. We'll have more on retail and retail real estate. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We do appreciate hearing from you. If you have any questions or comments, reach out to us in your favorite social media or email. or you can actually call us. We also have a carrier pigeon at the show. That's right. You can put a little note on the carrier pigeon and send us a note that way. And you can access all our contacts and our pigeon at commercialrealestateshow.com. Well, today we're exploring the world of retail and retail real estate with Mike Pooling with DLC Management and Robert Franson with Coro Realty Advisors. And you guys are working with a bunch of retailers all the time. You're always concerned, I suppose, about how well their operations are going and how they're doing in this environment. What are some tips that you see are working well today for retailers, Mike? What kind of advice would you give retailers to be successful?
I think it's the same old advice that goes way back, and that is just listening to your customers. I think the retailers that are doing it the best are the ones that are listening to their customers. And a good example of this is, Home Depot recently reported that they're investing, I think, $1.5 billion into their supply chain technology to link their stores and e-commerce, so that they can figure out how to omni-channel retail much more efficiently, and giving the consumer exactly what they're expecting in terms of an experience and options to be able to buy online, pick up in store, buy in store, deliver to the house. Is really where I think most retailers that are growing and are leading the industry, are doing a good job.
Yeah, and I also think that the experience is a good point to make because, unless you're going to compete on price, you have to offer something as a bricks and mortar retailer. And I think it's tough for most brick and mortar retailers to compete purely on price. I mean, unless you're a dollar store or a Walmart or somebody like that. So the area where the landlords are being asked to do more is providing that experience, whether it be the amenities of the shopping center, just the overall aesthetics. A lot of those sorts of things retailers are focused on in a way that they weren't before, because they're having to offer something beyond just the best price, because typically the best price is online.
Yeah. Well, I had an experience the other day. I went to a retail store, and I went to the store so I could pick it up that day. I didn't buy it online. Well, I got to the store. They said, well, come over here to the computer, and we'll order it for you, and it'll be shipped. And I'm like, well, okay. So then I go to the guy at the computer. Well, he wasn't very good at doing it online. He was the floor sales guy, so it wasn't a good experience. I said, well, my son could have done that for me in about 5 seconds. It took you like 3 minutes. Yeah. So that wasn't a good experience. But, that's a lot of what they're doing, though, all right? You go in the store, and you can look at what they have and then order it online, right?
Yeah, absolutely. And the training is a big part of that, obviously.
Yeah.
Well, and Mike can probably speak to this more than I can, but tenant mix, I think, is becoming more important, too, because it gives you that chance for cross-shopping where it isn't just I drive in, I pick up what I want, and I leave. You give them something else to do while they're there.
Oh, without question. I think that, tenant mix is one of the most important things of a shopping center today.
Yeah, and I think the tenants sometimes will wondering why you don't want them in your center, and you may not want them because they won't do well there because of tenant mix, or they won't help the other tenants, right?
Yeah, absolutely. I mean, if you look at a shopping center that's done right, we all know them. You go there and it makes sense, and you just go there and you say, look, this developer really got it right. And unfortunately, I think what happens is sometimes you go to chasing dollars just to chase dollars on a retail development, when you really need to understand that, okay, even though this guy's not going to be paying me maybe 75% of what everybody else is paying me in the development, this is a tenant that I want at the center because it fits my mix. Right. And you really have to look at it as a combination of the whole. It's like a clock where all the little parts work together.
Right. Well, I have a question for you guys. You're on the front lines here, and we hear that fundamentals are improving, occupancy and rates, but then we hear they're still downsizing, as you've just said. So, what should we expect moving forward for the rest of this year and next year for performance on retail properties?
I think the fundamentals are going to continue to improve. I think you're going to see an increase in demand, which you're already seeing from tenants. Again, what I mentioned, the expansions, right sizing to a degree, but also I think fortunately there are tenants to backfill that stuff now. 2 years ago when Best Buy wanted to go from a 45,000 square foot store to a 25, there was no one to take that other 20. Mm-hmm. Now there are actually people that'll take the 20 or maybe take 10, or so those options are out there. I do think that you have a lot of expansion, and on the supply side, I think you're going to start seeing new development. I mean, we at Coro, for instance, are starting to look at new development in Tennessee. We're looking in the Carolinas, mostly focused on kind of grocery anchor development deals where you can get some pre-leasing and it's not quite as speculative. Now, those probably aren't going to deliver until 15 or 16, so I don't think you're going to see supply keep pace with demand in the coming year, but eventually I think it's going to start to catch up, and I think that bodes well for returning to a certain amount of equilibrium.
We're on the break, but what demand are you seeing for these new sites?
Pretty good actually. I think the key for what we're doing is trying to keep the shop space limited. To do a grocery store with 20,000 square feet of shops is manageable. When you start doing 40 and 50, it's just hard to fill.
More on the retail market in just a moment. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back.
The Commercial Real Estate Show is brought to you in part by Florida International University. With FIU's Fast Track system, you can earn your master's in real estate in just 10 months without interrupting your career. Visit FIUonline.com to learn more. That's FIUonline.com.
Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We have some great shows coming up for you, including market updates and forecasts for multifamily and a show on mixed-use development. Don't miss a show of special interest to you. Sign up for a once-a-week email announcing show topic at our new website, commercialrealestateshow.com. Well, today we're talking about the U.S. retail sector with Mike Pooling and Robert Franson. And Mike, can you share a few tips for landlords related to leasing space in this environment? How can they attract more tenants?
I think that, one of the things that I try to do, and I know this might be a little elementary, but is just to provide great customer service experience all throughout the
answer the phone,
return
calls.
answer the phones. And I know that we joke about that. It's kind of funny, you say answer the phones, but I think we all know that there's a lot of leasing professionals and just professionals in real estate in general that probably have a full voicemail box right now, right? That are saying that I'll get to the guy. And the reality is that these people are consumers just like you and I. They don't want to be put on hold. They want their information now. And I think that if you're able to make sure that you're providing them a good customer service experience and you're addressing their questions, whether it be at the start of an inquiry all the way to throughout a leasing transaction, because when they go through that experience and it's a positive one, they're going to tell everybody else at the center that they were in, and they're going to bring people to you. And the best thing about a shopping center is that you want to be creating this positive momentum. A guy told me one time the hardest space in a shopping center to lease is the first one, right? And the easiest is to lease the last one. If you are able to have them be your word of mouth and say, hey, look, go talk to Sally. How well did I treat her during that? How was her experience? It really helps.
Yeah, that's a good point. And Robert, how are you guys attracting tenants these days?
Yeah, I think we're doing it. We're doing that, or we're trying to. I mean, you do hear the stories from our leasing reps about the have a blessed day customers that call, and you just, from 10 seconds in, this isn't going anywhere, but, you still act like a professional. But also what we're doing is, we're putting aside more money for TI. We're putting aside more money for commissions because tenant rep brokers have gotten more aggressive because I think they realize they're the gatekeepers. And I think what we're also trying to do is to focus more on the co-tenancy in a good way. Right? Co-tenancy has kind of a bad connotation where if one tenant leaves, you're going to lose three others because they all have co-tenancy. But for instance, we did a deal recently where we sold an out parcel to a restaurant that is just kind of a cool, popular restaurant that has 7 or 8 other locations. And we did it at a number that we probably wouldn't have if it had been at a bank. We probably took a $200,000 haircut to get that tenant there because we knew what it would do for the rest of the center. And focusing on that kind of co-tenancy, I think, helps your leasing momentum because suddenly you have the cachet of whatever that tenant might be. But it also helps in terms of just the overall appeal of the place and it makes it more desirable for tenants.
I like that. I mean, being proactive when you know you've got a tenant that the one is going to do really well in the center and then also help the center itself with the other tenants. I think that's fantastic. And being proactive and being aggressive and assertive with your rates. And then if you're not in retail real estate, co-tenancy is a clause in your lease that if a tenant goes toes up and anchor leaves or something, you have some rights in your lease to adjust the rent or maybe even leave. But there's less of that co-tenancy going on. I think that these days there's been so many problems with it.
I think we learned our lesson. That was
harder to
hard.
finance.
Yeah. What about some tips for tenants out there that maybe they're expanding and want multiple locations? And what would you give a tip to a tenant?
One of the things that I would tell a tenant is to, especially for locals, is to just make sure you're partnering with a with a landlord rather that's going to treat you well. I think oftentimes, especially for local mom and pop retailers, they're looking and saying, okay, well, what's the best price? Who's charging the lowest rent? And what you need to understand is that the lowest price also comes with the roof that leaks, the parking lot that has potholes in it, and the cracks in the sidewalk, and the lawn that doesn't get mowed. So, you really want to be careful.
And the other tenants that aren't bringing it by customers.
Right. So you really want to be careful about who you're partnering with. And I think partnering with a landlord that's experienced, that's maintaining their properties appropriately, I think is really paramount.
Yeah. Well, what about when you're looking, Robert, at a tenant and you're a landlord, what are some things that you look at to help you decide if you want that tenant or not, or how assertive you're going to be to get them?
I think we look at two things. We look at credit is king. Who they are, what their balance sheet, what's their track record, and the other part is what do they bring to the center. For instance, a dentist may have great credit and they don't tend to leave. They don't add a lot to your center in terms of driving, cross shopping. As where a restaurant may not have great credit but draws a lot of traffic. So it's trying to balance those two things. But those are really the two factors we mostly focus on: is what's the financial strength of the actual operator and the tenant, and what do they do for our other tenants that are maybe we're going to be able to make up some of the revenue by getting some better rates and some better tenants elsewhere.
Yeah, and I agree with that. And I think that, for me, I almost put, because I'm more on the leasing front, put mix above the credit in some cases, and the reason for that is because I think that, again, a shopping center is working together just like a clock, and you have to have that right operator using having that particular use in order to be successful as a whole. And oftentimes they might not be paying the rents that you want, and maybe you're taking a shot with them, but it's paramount, I think.
Well, those are good points. And one thing we've had success with is when we're leasing a space is to, first of all, think about who's going to do well there, and concentrating on that. And then we know what business will do extremely well there, then go to those tenants and show them. And maybe they have good credit, maybe they don't, but if they'll do well there, they're going to pay the rent, right? And help the center because they're bringing in more traffic. All right, well, we're going to take a break here. When we get back, we're going to have some more tips related to retail and retail real estate. This is Michael Bull, and this is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, Florida International University, Real Crowd, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.